What if I told you that while you were watching silver's price collapse and questioning every investment decision you've ever made, someone was quietly emptying the world as vaults and moving more metal in 7 weeks than most countries see in a year? I'm not talking about theory or speculation. I'm talking about hard numbers that anyone can verify. And when you see what I'm about to show you, you're going to wonder how every financial news outlet on the planet missed this story. About 3 weeks back, I stumbled across something in a data report that stopped me cold. Just the number that had changed. But the size of that change made me do a double take. So I did what any rational person would do at midnight. I opened a spreadsheet and started tracking it obsessively. What unfolded over the next several days pulled me into the deepest research rabbit hole I've fallen into in years. And I haven't found my way out yet. If you're holding physical silver right now, or if you own mining stocks, or if you've been watching that brutal price drop and wondering whether you just made the worst financial decision of your life, what I'm about to walk you through is going to answer that question. I'm going to lay out exactly what I discovered, step by step, in the exact sequence I found it, so you can see this unfold the same way I did. And somewhere around the middle of this video, you're going to hit a data point that'll make you stop, rewind, and watch it again. I know this because that's exactly what happened to me when I first saw it. Everything started with a single chart. The Shanghai Futures Exchange publishes vault inventory data every single day. This is Yuan Suan, a opinion or market analysis or some random person on the internet making educated guesses. This is the exchange itself, telling the world exactly how many tons of physical silver are sitting in their warehouses. Real bars, real votes, audited figures that get updated daily. I pulled up one of the most respected economic data platforms in the world and grabbed the time series data going back several weeks. In mid-December of last year, the exchange reported roughly 900 tons of physical silver in their vaults. The number I saw on February 4th was 423 tons. I stared at my screen. Then I refreshed the page thinking maybe there was a glitch. Same number. So I pulled up the previous day's figure. For 49. The day before that? For 6. The day before that. Igerstila kept going back, day after day after day. Every single entry was lower than the one that came before it. Not most days. Not on average. Every single day, without exception, the number dropped. I pulled 6 full weeks of data and couldn't find even one day where inventory went up. That's not a normal market fluctuation. That's not seasonal adjustment. That's a one-direction evacuation. Silver's walking out of those vaults, and it's not coming back. Let me put some real context around these numbers, because raw data without perspective is just noise. 900 tons down to 423 in 7 weeks. That's a 54% drawdown. More than half of China's primary exchange, silver vanished in less than 2 months. The weekly drain rate works out to about 42.5 tons. Daily. Almost 11 tons leaving every single day. And if you map this on a chart, the slope isn't flattening out. It's getting steeper. The drain is accelerating, not slowing down. Now zoom out and look at this in a global context. When you combine the Shanghai Futures Exchange vaults with the Shanghai Gold Exchange vaults, you get roughly 900 tons total across all of China's exchange-accessible silver. That's about 29 million ounces. Sounds massive until you realize the world consumes over 1.2 billion ounces of silver every year. All of China's exchange silver covers 2.4% of 1 year of global demand. 2.4%. That's not a cushion. That's fumes. Here's something none of the articles I found about this data bothered to do. I ran the math forward. If the drain continues at 42 tons per week, and current inventory sits around 12 tons according to the latest data I could pull, you divide for 12 by 42 and you get 9.8 weeks. Let's call it 10. In 10 weeks, at the current rate, these vaults hit 0. Not low. Not concerning. 0. Empty shelves. Nothing left to deliver against futures contracts. Now, if you're sitting on physical silver or silver mining stocks right now and you just watched a 53% price crash, I need you to understand what this number actually means. The exchange that backstops a huge chunk of Asian silver price discovery is running out of metal. I'm not predicting this will definitely happen. Drain rates can change. Metal can flow back in. But nobody in mainstream financial media is even running this basic calculation. And that fact alone tells you something about the quality of information you're getting from traditional sources. This is where my research took an unexpected turn. I wanted to know if this was just a China story. Maybe Chinese industry is pulling metal for solar panels and electronics, and this has nothing to do with anything bigger, right? That would make perfect sense. China is the world's largest consumer of industrial silver. Case closed. So I pulled the data from the main silver futures exchange in the United States, and my stomach dropped. According to data reported by multiple precious metals sources and confirmed across several platforms, a 34 million ounce drawdown from its recent peak. The exchange isn't bringing in new metal. At that point in my research, I didn't really want to check the third one because I already suspected what I'd find. The silver that's actually available to settle London's massive unallocated accounts. For the first time in modern recorded history, all three major transparent silver inventories are draining at the same time at record speed. The reports estimate that nearly 1 billion ounces of refined silver have vanished from visible stocks since 2021. Stop for a second. I need you to hold those three facts together in your mind. Shanghai draining, American exchange draining, London draining. Same direction, same time frame, same metal. There's no historical precedent for this. If this were happening to oil, it would be the lead story on every financial network in the world. If this were happening to copper, there would be congressional hearings scheduled by Friday. But it's silver. So you're rehearing about it from someone on YouTube instead of the front page of major financial publications. And honestly, that's part of the story too. So the next question is obvious, and it's the one that kept me digging until 3 in the morning. Who's taking the metal? Because silver doesn't evaporate. It doesn't dissolve. When it leaves an exchange vault, it goes somewhere. Someone signed a delivery warrant. Someone arranged armored transport. Someone has those bars sitting in their facility right now. And whoever it is, they're doing it simultaneously across 3 continents. Let me tell you what I found on the American side. On January 7th, a single day of deliveries moved 8.1 million ounces of physical silver. According to detailed analysis from Precious Metals, one major bank delivered 99% of that total. One institution, 8 million ounces, one day. After that massive delivery, you'd expect demand to cool off. Right. Open interest went up. New buyers were piling in as fast as the old ones were getting filled. And according to analysis from precious metals dealers, something even stranger was happening in the background. In normal markets, people roll forward to delay. Here, they were paying extra to accelerate. They wanted the metal sooner, not later. The simplest explanation: they don't trust it'll be there if they wait. On January 1st of this year, China's Ministry of Commerce implemented new export controls on silver. State-run media quoted an unnamed industry insider who said the new policy formally elevates silver from an ordinary commodity to a strategic material. Let that language sink in. Strategic material, the same regulatory category as rare earth metals. Under the new rules, only 44 large state-approved companies that produce at least 80 tons of silver annually and maintain $30 million in credit lines are permitted to export. According to financial analysis, this effectively restricts 60 to 70% of the world's refined silver supply to domestic Chinese use, with one tech CEO writing that this development was concerning because silver is needed in many industrial processes. According to news reports, within days of the announcement, an Indian buyer followed the next day offering $10 above market. That's how you know a restriction is real. When buyers start calling miners in other countries offering premiums just to secure metal, you know supply just got tight. They created a licensing bottleneck so narrow that most of the world's silver refining capacity is now functionally landlocked inside Chinese borders. By November 21st, just 51 days later, those same vaults held 519 tons. According to detailed precious metals analysis, 670,000 kilograms of silver disappeared in under 2 months. And here's the detail that stuck with me. On November 21st alone, another 15,800 kilograms were removed. The price of silver was falling that day, not rising. Normally, when price drops, sellers appear and buyers retreat. But someone was pulling more metal out on a down day. That's not speculative behavior. And now the metal's flowing out again, but this time it can't leave the country. It's staying inside China, being moved from exchange vaults, which are visible and public, to somewhere else. Industrial facilities, government stockpiles, military reserves. We don't know exactly where because that data isn't published, but we know it's leaving the exchange system and we know it can't leave the country. Someone is moving silver from the public ledger to a private one inside a closed system. Now, while all of this was happening, the only investment vehicle available to Chinese citizens who wanted silver exposure was being systematically shut down. There is a silver futures fund that is the only publicly traded option in China that invests directly in silver futures. According to multiple reports, that fund stopped accepting new subscriptions. Chinese retail investors who wanted to buy silver through the regulated financial system got cut off. They couldn't buy new positions. The door closed. Look at those steps. Export controls, vault drains, fund lockouts, Western price crash. Do you think that sequence is a coincidence? Or does it look coordinated to you? Because what I'm about to show you next made me pick a side. I want to show you a historical parallel that made this entire investigation click for me. Because patterns matter more than predictions. In 2005, China began stockpiling copper at a pace the world had never seen. Exchange vaults drained. Prices were still manageable. Western analysts scratched their heads. Why is China buying so much copper? The answer became obvious within 18 months. China was building strategic reserves ahead of the largest infrastructure build-out in human history. They were buying everything they could at every price they could manage before their own demand made the metal unaffordable. The copper price didn't double, it tripled within about a year, and by the time the rest of the world figured out what China was doing, it was too late. The metal was gone. The reserves were built, and the new price reflected a world where China held the inventory and everyone else held IOU. Now look at what is happening with silver in 2026 and tell me if the pattern doesn't look identical. Vault drawdowns accelerating. Export controls locking refined supply inside borders. Only 44 state-approved companies allowed to ship anything out. Retail investors blocked from competing through fund suspensions. The paper price suppressed through a combination of margin hikes in the West and fund lockouts in the East. The playbook is the same, but the stakes are higher. Because in 2005, copper wasn't simultaneously being designated a critical mineral by the United States, discussed for international price floors by 55 nations, and about to be remonetized by the world's largest democracy. Silver has all of that, and the vaults are emptying faster than copper's ever did. Now let me give you the number that ties this entire investigation together. And this is the part I told you about at the beginning. The part that made me pause and rewind my own notes. China's export controls went into effect January 1st. At the current drain rate of 42 tons per week, the vaults approached zero around mid. I checked that math 3 times. Mid-April. Then I looked at something completely unrelated. India's Reserve Bank has issued new regulations allowing silver to be used as formal bank collateral, effective April 1st. 1.4 billion people gaining access to silver as a monetary asset. I looked at the 2 dates side by side. The week the Chinese vaults approach empty is the same week India goes live with silver as money. I sat back from my screen and didn't type anything for about 5 minutes. I didn't manufacture that convergence. I didn't cherry-pick dates to make a narrative fit. Chinese vaults approaching zero. Indian monetization going live. The world's factory running out of visible silver at the exact moment. The world's largest democracy tells its population that silver is money. This is about a once-in-a-generation restructuring of who holds silver, in what form, and under whose rules. Now let me tell you what this means if you're invested in silver, because data without implication is just trivia. The paper price. The number you see on your screen. The number that made you sick when it crashed. That price is set by exchanges that are running out of the physical metal they need to back those prices. Chinese exchange approaching zero. American registered bleeding since September. London free float at historic lows. When the physical runs out, the paper price stops being a market price and starts being a fiction. And fictions don't survive contact with delivery notices. The question every silver investor should be asking right now is where's the price going this week? It's what happens to price discovery when the vaults that underpin it are empty. Because that moment isn't theoretical. It's 10 weeks away on the Chinese side, and nobody on mainstream financial television is even discussing it. There is a line from Precious Metals Analysis that I have been able to get out of my head since I read it. The idea was that when the last readily available bar leaves the vault, the price discovery mechanism shifts from whatever the paper market can bear to whatever it takes to pry the last ounce out of private hands. Read that again. Whatever it takes. Shanghai is at 412 tons and falling. American registered is bleeding out since September. London's free float is at a level multiple analysts ascribe as the lowest in modern history. The 6-year structural deficit hasn't reversed, and the world's largest refiner just welded the exit door shut. The question isn't whether the vaults will empty. At this trajectory, the question is, which vault empties first? I want to leave you with a question, not an answer, because I think you're smart enough to draw your own conclusions, and I'd rather arm you with data than opinions. If you were a government, or sovereign wealth fund, or a state-linked industrial conglomerate, and you knew that silver had just been designated a critical mineral by the United States, discussed for international price floors by 55 nations, and was about to be formally recognized as money by the world's largest democracy. And you also knew that UD just locked 60 to 70% of global refined supply inside your own borders. What would you be doing right now? Would you be selling, or would you be quietly moving every bar you could get your hands on from a public exchange, vault into a private one, while the rest of the world watches the paper price and thinks the trade is dead? The vaults don't lie. They publish the numbers every day, and every day the number is smaller than the one before, and they need the price low enough to take it before the rules change. If you held through this crash, you're not wrong. You're early to a game that the rest of the world hasn't figured out yet. The data is on your side. The vaults prove it. What I found will change how you think about the price you see on your screen. I'll keep watching. Keep tracking every vault report, every data point, every delivery notice. This isn't financial advice. This is what the data shows. What you do with it is your decision.